Hello friends, in today's video we will be discussing a special opportunity in NTPC which could yield positive payoff in coming days. The company has announced a buyback of nearly 2% of its equity at the price of 115. The retail shareholder reservation is nearly 15%. So any shareholder holding 2 lakh rupees worth of stock or less before the record date of 13th November 2020 would be eligible for the buyback in retail shareholder category. So we have recommended a arbitrage opportunity in NTPC which could yield nearly 20,000 rupees of profit for traders who have only single trading account with IIFL and nearly 50,000 rupees of profit for traders who have multi-family account with IIFL. These profit numbers that I am referring to are subject to market conditions, but we are confident enough that there is very high probability that this number could be achieved in the coming days. However, we don't guarantee the returns. Now coming to the strategy. I would just like to first give you an update on plain vanilla strategy on NTPC, which is for traders having only single trading account with IIFL. So what you guys have to do? You guys have to put in 2 lakh rupees of investment in this strategy. What you have to do is you have to buy 2300 of shares at the current market price of 85. So you have to buy NTPC shares worth 1,95,500 rupees. So the total shares that you have bought would be 2,300 shares. Now what you have to do is you have to tender these shares for buyback. When you do so, we believe that the entitlement ratio would be nearly 25%, meaning that whatever holding you have, 25% of your holding would be taken over by the company at the buyback price of 115. So as you had 2300 shares, out of which if 25% shares is taken over by NTPC at 115, you will be left over with 1750 odd shares. As 525 to 550 shares of yours would be taken over by the company at 30 rupees above the market price, the total profit that you will make would be around 17,250 from the buyback of 575 shares of yours taken over by company. Now you are left over with 1725 odd shares. What you have to do is, since you made 17,000 rupees of profit on your buyback shares, your average cost of the balance 1725 shares comes to around 75 rupees. As long as NTPC trades above 75 rupees on the day of buyback, whenever your shares get taken over by the company at 115 rupees and you get credit of 17,000, you can sell those remaining shares at the prevailing market price then. We believe that in best case scenario, say the stock doesn't move only, stock hovers around this level only, then easily you will make 17,000 rupees money. If say stock comes down to 80, still you will make around 10,000 rupees of profit. If it comes around 20, you will make 20,000, 22,000 rupees of profit. So it depends on the market condition, but overall our view is that the stock should remain above 75 rupees when the buyback happens. So if the difference between the prevailing market price then and your average purchase price of 75, you will make the difference of that. So we believe that you could make between 10 to 20,000 rupees of profit by doing this simple strategy. Now I would come to a more complex strategy which is eligible only for traders who have multi-family account with IIFL. So what is multi-family account? Multi-family account is nothing but a simple trading account of multiple people in your family with IIFL. Say you have a family of 5 people, out of which 3 people have a trading account with IIFL. Mr. A, Mr. B and Mr. C. So what you have to do is, in those multi-family account, you have to buy NTPC worth 1,95,500, which we discussed earlier. That is, you have to buy 2300 shares of NTPC in all the three accounts. If you buy 2300 shares in all the three accounts, the total number of shares that you have bought is 6900 shares. Why we are buying this 6900 shares? Because we want to hedge our holding with futures market. As the lot size of NTPC in future is 5700 shares. So by buying 6900 shares in cash market, what we have done is we will be balancing our cash holding with our future short selling, so that our hedge remains around 90% and we don't lose by the market fluctuation. So now I'll just give you a math in which you could make nearly 40 to 50,000 rupees of profit. What you have to do is, as you have bought 6900 shares at 85, what you have to do is now tender this share to the company at the market price of 115. As we believe that the entitlement ratio would be around 25%, nearly 1725 shares of yours would be taken over by company at 115 rupees. If this thing happens, you will make 30 rupees on 1725 shares, which would amount to 51,000 rupees of profit just on buyback. Now you are left with 5,175 odd shares. Now since you have 5,175 shares of holding in cash market and your future position is short selling in future positions you have done at 84.7 rupees, that is current market price of today. What you have done is you have short sell the futures contract of December at the current market price of 84.7. The lot size is 5700 shares. So you have a buy holding at 85 for 5,175 shares, and you have a short selling in futures market of December series at 84.7. So nearly the price is same. There is a difference between quantity of 525 shares. So that's why I'm saying that we have a 90% hedge. Now assume that, as you know that spot and future market expires at same rate on the expiry. Now assume that on December 20 expiry, the price of NTPC rise to 98 rupees. So your cash and future holding both are at 98 rupees. So what you have to do at that time is you have to square off your futures positions. Since you had short positions in future, you have to buy future at 98 rupees. Since you had long positions in cash, you have to square off your cash positions in the market. That is, you have to sell your cash positions at 98 rupees. So by doing this, you will be losing nearly say 8,000 rupees. Why? Because the 525 quantity, which was the difference between your future and cash, that price would be changed because the price at which you entered the trade was 85, now it is at 98. So you lose 13 rupees on that 525 shares, which would amount to nearly 8,000 rupees of loss. Since you made 51,000 rupees of profit in your buyback and you are losing 8,000 rupees in this hedge, you will be making nearly 43,000 rupees of profit on your investment of nearly 7 lakh rupees. That is 5,80,000 from your cash investment and 1,30,000 on your margin for selling the futures. So nearly, if you see, the return on investment is around 7%, which we believe is very achievable in the coming months, as the buyback opportunity is very big and one should not miss out on it. Thanks a lot.